Live. Here we go. Good morning, good afternoon, good evening, everybody. Super excited today to be joined by, of course, Rob, as usual, and a star guest, Dave Lee from Dave Lee on Investing. So, how are you guys this morning?
Awesome,
Great.
doing well. Great to be
Yeah,
here.
great to have you guys here. So, this will be an interesting conversation today. But before we jump in, everybody who's new to Dave's channel, his link is below. And of course, Digital Asset News as well. Both are there. So please subscribe to their channels if you want life-changing information. So with that, what do you guys think? What's happening so far this weekend? You guys been looking at the markets, the crypto markets,
I
etc.?
got, I got to be honest. I haven't looked at the markets today, and it's one of those rare days that I just don't look at my portfolio and what's going on. I was so busy doing some edits for my video today. I just didn't look at it. So I'm guessing we're still around 3 trillion. Just guessing.
Yeah, thereabouts. It's the markets have been a little bit weak, but in a very tight range, I think. Up and down, which it just appears to be kind of coiling up. We did have some good strength across some areas, but it's also been an interesting week in the stock markets too. So we'll dig more into that as well. So before we jump in, I think the interesting thing is you guys approach investing from very different perspectives, but now the worlds are beginning to collide. So, for example, Rob, it's fair to say you invest in many different things, many different businesses, from Amazon businesses, real estate,
It's true. I
crypto,
do. I try to anyhow.
etc. And Dave, your investing philosophy is extremely interesting because you have extremely high conviction on a couple of names. So, would you guys like to share, how you first of all, when you started investing, and what were the big aha moments, and any lessons learned you can share with the audience here?
I want to
Yeah,
hear
sure.
Dave's perspective.
Yeah, sure. So, my story is I did 10 years of like kind of nonprofit work in my 20s. I was living like, had basically almost no savings, barely anything. Profit work, I felt like I needed more resources to do more stuff. And I always felt a lack of resources. And so in my early 20s, I got married. And then told my wife I want to look into business or investing. And I looked into stock market, real estate, and everything. And I'm like, I was so frustrated that, the average is only 5 to 10% per year or something. And I looked at, okay, if I'm the very, very best at investing, what could I expect in terms of compounding growth? And it seemed like maybe 20%, max 25%. So I calculated it out. I'm like, if I'm going to do investing in business, I should at least shoot for a doubling, every maybe 3 years or so. And over 10 years, I should be able to get a 10x if I'm really, really good at it. And so I told my wife, like, I'm looking for a 10x, in 5 or 10 years, but I want high conviction and I want high probability that this is going to work out.
Yeah.
And this was like unheard of, basically how can you have high conviction, high probability and 10x gains, let's say, in 5 or 10 years. And so my first foray into investing was actually into more real estate. And this was at the crash. And I was like, I was following a lot of real estate people. And at the bottom, I'm like, oh, we can get a whole plethora of real estate at cheap prices, get mortgages. And we started to do that. And then my second foray, actually my first, both was real estate and then a business. So I started an app company, and we developed, my wife and I just sketched out a simple women's health tracking, period tracking app. And that was in 2008. And we paid $500 for someone online to code it for us. And it immediately started making money.
Wow.
And within 3 months, we had 2 full-time developers in our company, expenses paid. And the only money we ever put into that company was $500. That's it.
Wow.
And with that, it started to generate cash flows, and we didn't know what to do with that. And so that created another problem. What do we do with this extra cash flows? I thought real estate was going to be the answer, but after kind of tension with tenants and all that stuff, I was looking into kind of more of a passive, easier kind of hands-off thing. And so I was looking, I had this growing bank account that I had 0% interest. And I was determined not to get any interest on it because I wanted to burn a hole in my pocket. and I wanted to find something amazing. And so I told my wife, like, I don't want a simple 10% gain or 15% gain per year. I want 10x, within 5 or 10 years, high conviction. And we kept on looking. And then in 2012, I ran across Elon Musk, spent 6 months researching Tesla. And I just basically, over the period of about 6 months, we just put pretty much all of our savings, all of our cash into Tesla at that point. So everything we made from the App Store, we just stuck it all in. We stopped buying real estate. We actually sold some, and we actually stuck it all in to Tesla. And then that started kind of this journey of tracking the investment, making sure it was on track. And I saw a clear 10x within 5 or 10 years. And I saw another possible 10x if they made the Model 3 an awesome vehicle. And so I said, hey, this is a possible 100x, in 2012 and 2013. And so I stuck with it. Yeah. And that pretty much is kind of how I've reached this point where my initial kind of life savings kind of has done 150, almost 200x. And now I'm actually diving into crypto, picking up some stuff, making it a small part, but I'm looking for high conviction. So I could start I feel like the big run for Tesla is done like 100, 150x, 200x. I feel the next decade, I feel like Tesla has a good chance of doing a 10x, but I feel crypto in many ways can do a 10x or 100x depending on the project and depending on the asset. And so that's kind of my main kind of motivation with crypto. I see like a possibility of great gains if the right project and the right stuff is chosen.
So what you just said there just collides with so much that we're going to talk about today. It's amazing. So in fact, I'll pull up an article that talks about 100x potential for crypto in a little while. But Rob, how about you? How did your investing journey begin?
I'll make it super quick. Army, I was a medic. You can't make much money there. And then all of a sudden I thought I was going to do like 20 years. And then all of a sudden I'm like, you know what? I'm not going to make, this is a great profession, but it's, you really can't do too much. So I got out of there, went into nursing, did pretty well. Director of professional services at a couple different companies. And then I just said, you know what? I got to start working for myself because I can work real hard for somebody else or I can work for myself. And then online education, nursing platforms, Amazon business, and then getting into real estate, which is probably one of the better things that I've done. And then just try to get into as much income that's passive as I could say. And that's kind of what led me here. Because I think there's a different ways to do it. You can get rich, just having your own business. You can get rich quick or quicker by doing a little investing. Then you can kind of get rich tomorrow by just gambling on some crazy stuff. So I'm trying not to do the get rich tomorrow because it makes no sense to me, but just to have a little bit of a longer play. And that's why we're in crypto and digital assets, because just like Dave talked about, I think we can do a pretty good play as far as 100x as opposed to the S&P where they get, typically what are we talking about? 23%, something like that year over year.
Exactly.
So that's why I'm here.
So what do you think of this particular slide here regarding diversification? Because Dave, you have extremely high conviction in one area and you went all in, no fear. You did 6 months of hardcore research, and your journey, Rob, is a little bit different. You said your real estate did best for you. What do you think of this old phrase from Warren Buffett?
Let's see. I can't see the screen.
Sorry. This is why diversification is only when investors do not understand what they are doing. So
I think
stocks.
So we actually talked about this last time. I remember we were talking about the different diversification, even within cryptocurrency, because I was saying like, okay, you can diversify and just go, you know what, I think Bitcoin's gonna be great, so I'm just gonna go all into Bitcoin, and that's it. Hopefully it works out. Or you know what, I think Ethereum's gonna make it. I'm gonna go all into Ethereum, which would have been pretty good either way, but depending on the time that you get in there. The problem that I see is that if you went all in on Bitcoin on, let's say November 2017, and then next year you were trying to do things, you just got slaughtered because you were into one type of thing and you didn't diversify just a little bit, at least within that classification. And that's one of the things I look at. I go, well, what's going to give me some type of residual income as when like we have like the downturn, right? In 2008, it was the same type of thing with the housing market. If you had a lot of powder on the side, you could have bought up a ton of properties at that point and got them for super cheap. Or if you went all in 2007 and bought at the top, it would have been a disaster. So for me, I know that Warren Buffett's like, diversification is for people who don't know exactly what they're doing. But for me, I feel like it's a little bit safer option than just going, I'm going to go all in on this one thing, even though I feel like it is the best thing of all time and it's going to be fantastic. I just try to space things out just a little bit because I'm not going to be that genius who goes, this is the one and it's got to be the one. Because as I've gone through life, I've met a lot of people that say this one thing is going to be it. And I'm going to get into that. And if you do that, it's fine as long as it works out. And it's all about timing. Like in the crypto game right now, I can tell you, just like we were talking about with Raoul Pal going to 300 trillion, it'll probably go there. It's going to be in 10 years or 40 years. I have no idea. I just know that the trajectory it's going to go, but it's really about timing. So that's why I diversify just a little bit so I don't get caught short.
All right. I think, Dave, you might be frozen. Can you hear us, Dave? Can we hear you? Uh-oh. Internet bug. Let me let me try to text him and make sure he is coming back. Yeah, he's dropped. He'll join back in. So I got to monitor the green room carefully when he pops back in. So hopefully, but that was super interesting because I tend to be a little bit between Dave full conviction and you many businesses, but I tend to have full conviction in a couple of sectors and 2 or 3 different sectors. And that's when I go in. Okay, he's rejoining it to reset a computer. So that was cool. And while we're on the subject, the year, like what would you advise now for people who are thinking about getting into cryptos? A lot of people that are late to the market. FOMO times are here. There he is. All right. Let me see.
I'll get to that one as soon as Dave answers his part with the convictions.
Oh, now
right, sorry about that.
No worries.
Weird happened there.
Live TV. There's always problems, so it proves it's real. So thank you for coming back. I don't know if when you went quiet.
Yeah, I heard actually all of that.
Okay, good.
I didn't know I was frozen. I was like, yeah. But yeah, this diversification thing is so interesting to me because I have a lot of thoughts on this, but one angle is I think if you have higher income, you can take more risks because you can always recover more easily. So let's say you have a plush job, you're making, $300,000-$400,000 a year. If your investments go bad, you could rebuild your portfolio. So I think the higher income you have, the more opportunity you have to go focus and concentrate it. The second thing is the younger you are, the more time you have to recover as well. Like if you're in your 50s or 60s and you have low income, then like the higher risk you take is just, it's tough, it's tough with age and with low income. But I think, and the other thing is like, it's all about kind of the ability to recover, I think. And if you can recover, you can take higher risks. And that's where, like, actually with Rob, I agree in some ways, like passive income could help. And so like, for example, having some real estate passive income early on for me helped me to take a huge concentrated bet, let's say in Tesla in 2012. And so, yeah, I know a lot of friends also, and actually having a business helped too, having high income or even being like, I know friends that have had high incomes and that's helped them to take big risks. The other thing that's helpful to take big risks is when your assets grow to an outsized portion, let's say beyond what you need for retirement, a lot of people, they kind of pull back and they diversify and they try to just preserve. Exactly. I think that's actually a great opportunity to take the next level and to actually take on some additional risk. But the key thing is, I think both of you guys, I think I resonate, is you need knowledge. You need you really need to be the best of the best in that field that you're invested in. Yep. So whatever your key investments are, you really should be world class. You should be the person or at least part of a group of people that know the best about that asset if you're going to be as concentrated as, as like, for example, for me. But yeah.
Exactly. I prefer far fewer bets, much higher conviction, and a ton of research. So you got to know everything about that asset, as good as any expert that would focus on it entirely within Wall Street. So big question for you guys. When did you get orange pilled? So let me pop this one up as well. I don't know if it shows or not, but when was it for you guys that you bought your first Bitcoin? And I know, for example, Dave, with you, it's a recent development, perhaps. And Rob, you're an OG. You've been there since a long time. So maybe start with you, Rob. When did you get your first taste of the orange pill?
2012.
Well,
2012. And of course, everybody's like, oh, Rob must be a billionaire now. No, Rob was a little dense. So what happened was, and I think most people know the answer on this channel, but son came home. He said, hey, I've got a friend at school who wants to sell me 500 Bitcoins for $500. It's on a hard drive. He's going to give it to me. I go, well, that sounds good. What's Bitcoin? And he tried to explain to me, well, it's decentralized. And you know how this is, right? I mean, everybody who's watching this show, there's some people that explain crypto, digital assets, and decentralization like to a T and simply. There's some people that just kind of, I think it's this thing and da-da-da. And that's kind of where we were at. And I was like, Alan, that makes no sense. And I'm not going to buy that. And that was it. I think that like a year after that or so, of course, that was one of the times that China banned Bitcoin yet again. So I was like, see, I told you it wouldn't work out.
yeah.
But then as time went on, he would keep talking about it. And I go, you know what? This is something that I should look a little bit into, because, I mean, when we saw everything go kaput in 2008 and everything just kind of collapsed on us, we can kind of see that inflation and the influx of the dollar and the quantitative easing, it wasn't really good for the economy, especially like even moving towards now. So I figured there has to be a better hedge that would more suit to what I would be interested in. And when I looked behind Bitcoin and I took a look at, well, you know, there is the scarcity aspect. Well, there is the security aspect. Well, there is that decentralized aspect of it that really, I felt like, even though at that point I owned gold and silver, it really couldn't compete that way. So in 2017, when everything was starting to do a hockey stick up, that's when I got in. So that's how I got pilled per se. It just took me a lot longer because, again, I had to figure it all out.
And everybody has that moment. So there was a tweet somebody shared with me, I think it was from Michael Saylor in the year 2013, that he described Bitcoin as a gamble casino. Everybody's going to go broke. But it just shows you that the smartest people are the ones that can change their mind and revise their position. After being heavily against it in 2013 to today, probably the most convicted person. Dave, how about you?
Yeah, for me, I've been following, Bitcoin and Ethereum for probably a good, maybe like 5 years or so. I was actually like one of my initial things was just purely as like a plan B in case things just fall apart and, tiny chance, but, having some assets that are completely out of, the system. And so I was like, trying to buy some actually. I think like in 2016 or 17. And that time it was just like withdrawing cash, from the bank and meeting people through this website where you can, meet up physically to exchange Bitcoin. But actually, I didn't do it because I was like, I pulled part of the things is like after I don't know if I regret this because I had all my cash into Tesla at that time anyway. So I had to pull cash, but it's like pulling like a decent amount, like not just a couple thousand, but actually a decent amount of cash. It kind of got me scared of the system of like, okay, like all these reporting requirements for the bank and all this stuff. I'm like, oh, is this worth it? And do I want to cash out Tesla at this point? Because it was still quite low. So I remember I set up an appointment to meet someone to buy Bitcoin, probably like $20,000 worth of cash, to exchange. And we had the appointment that afternoon. I went to the bank and they were giving me such a hard time pulling $20,000 in cash. They were just like asking all these questions, making me go through all these hoops. And I'm like, forget it. And then, so I've been kind of like a watcher of Bitcoin since that time, and Ethereum has always caught my eye with the technology behind it. But it wasn't until I think interviewing a lot of Bitcoiners end of last year, I started to feel like there's a tension where I don't know if I completely resonate with everything Bitcoin or Bitcoin maximalists are kind of saying about Bitcoin. And to clarify, is I think Bitcoin is a solid asset. Like in January of this year, I started to pick up my first Bitcoin at that time. But I feel like Ethereum matches kind of my background a lot more because I'm a technologist. Like I'm into software. I've been, working with developers basically for the past 10 years. And I'm a big proponent of like innovation and disruption. And I think over the past maybe year, Ethereum actually has caught my eye a lot more. I think part of it was I interviewed Robert Leshner of Compound at the beginning of this year, and I started to go into the DeFi space and decentralized apps and the vision of a parallel economy that Ethereum can create. And I really feel like that is going to be the driver for the crypto economy going forward is not just having a store of value, which Bitcoin can provide, but actually having an entire parallel economy that can eventually grow even larger than a real physical economy.
You're
And
dovetailing
that,
into the metaverse here, correct?
yeah, it's I would say it's like it's not just the metaverse. It's not just DeFi. It's not just decentralized apps or DAOs or whatever. It's an entire economic system. If you can think of it as like the internet has created an entire digital, like, relational e-commerce and all of that stuff. But the internet is still run on top of a legacy government system, a legacy bank system,
Yep.
a legacy credit card system. Everything is legacy in terms of the rails, the financial rails of the legacy economy. What crypto is doing is they're providing a new rail in economy, which is completely decentralized and digital, not controlled by government or banks, et cetera. But what that's allowing the possibilities is to build an entire economic system with new players. So you have new financial players, new investors, new companies, new economic models, goods and services. Everything is being built on top of these new rails, but the rails are fundamentally more efficient. Like they can be lower cost. It's less. There's no you don't have lawsuits per se because people agree. The smart contracts are determining the rules, right? You don't have to have all these third party mediators. But I think this play is huge. It's a probably a 1 to 2 decade play where this rolls out, and we're just.
You
froze again.
Well, hey, before Dave comes back, I just want to add on to one thing you said about as far as being efficient. Like online retail, because I have a couple of different businesses like that. To actually process the payment systems, you're really going to use here in the States is either PayPal or Stripe. And for every transaction that you do, it depends. It's 1.99% or 2.99% plus 30 cents per transaction. So if you add that up, let's say you have millions of dollars or billions of dollars of transactions, how much is that really costing the business itself as it just goes to these huge companies, as opposed to getting something with cryptocurrency, and they could actually do it on those rails like what Dave was talking about. I think it's the things that we know about, but it's the things that we should really be thinking about as far as why would people move over? Not just because that the price is going to go up, but because it becomes so much more efficient for these businesses to move over to save money and then even grow their businesses, as opposed to getting stuck in that rat trap. And before you know it, they go, hey, where's all our profits? If we just would have had this 5% over here, we could actually hire more people and grow, and we couldn't do that because of X, Y, and Z. So
exactly.
That part made a lot of sense.
You guys both touched on something here. I don't know if this is popping up or if I'm sharing or if you can see, but basically Raoul Pal, who is the macro guru, he predicts the total value of crypto markets will surge 100x amid lightning speed adoption. And his whole thesis, let me turn that off.
Is this by tomorrow, or when is this going to happen?
This is by 2030, which is fast. But so this guy, literally, he's a macro guy, a macro investor, very good pedigree, knows what's going on. He sees it as kind of it's called a $2.5–3 trillion asset class, depending on the day you're looking at it. And he said the most important major asset classes around the world are things like equities, bonds, real estate, etc., worth say $200–350 trillion. We all agree to that. I always call it the $400 trillion market. That's going to be disrupted by things like crypto and Ethereum, etc., because of what Dave said. All the old rails are old, internet's old, etc. Everything is changing so fast. But the speed at which, I think, is part of his thesis. is going to go basically to a $200 trillion asset in the next 10 years or 9 years by 2030, depending on which way you skin it. And that's 100x for an asset class. And his point is mankind has never, ever seen anything like this before. So it's an opportunity for everybody, rich or poor, to put 10% of their assets in this asset class, because there, according to him, again, talking about conviction, this is the theme today, he has absolute conviction that this is going to happen. No doubt in his mind at all. So what do you guys think about that? First of all, do you think the space could 100x over the next 10 years? And second of all, do you think people should allocate 10% to it or more? I'm irresponsibly long. I'm way heavier than 10% in the space.
Yeah, well, I mean, you and Kevin O'Leary, right? I heard you on your show talking about Kevin O'Leary said, yeah, he said in the beginning the idea was just to get to like 2 or 3% of my portfolio of everything into crypto. Well, it just accumulated so fast, and the gains were so quick that now it's 10%. That's Kevin O'Leary, who I know, depending on what you believe, if you believe that he was just in the shadows lurking around trying to tank the price, then maybe he had more, I suppose. But now at least he's out there in the public, and he's got the ear of a lot of categories of people: Gen Z, millennials, Gen X, all those things, baby boomers. So if they're listening to him going, wow, this guy who is super successful and he put 10% in, why wouldn't that be something that I couldn't do or could do? So when we talk about, like what you said, like to get to $300 trillion in 10 years, here's the next thing I'm thinking of. What if it's even faster than that? What if everything gets disrupted? And only reason I say that it could actually happen that way is because of what happened with COVID. And Kevin O'Leary even said the same thing. He goes, because of COVID, it pushed everybody outside, or that was outside in, to focus into the internet. And then, of course, all his business to consumer type of thing just went a little bit haywire because he tried to push things more towards the internet sales and things like that. So he goes, that is also what happened with crypto and digital assets. He goes, so everything kind of, if we start to talk about, and I know people don't get it yet, I understand, but the metaverse and things moving this way, how much could we actually do? 300 trillion, I mean, what's the market of traditional equities? 400 trillion, somewhere around there?
No,
200,
I think it's 100 trillion equity market. Another 100 trillion in real estate. Bond market is 50 trillion, etc. Diamonds, jewels. It's about, all in is about 400 trillion, but a lot of it will be disrupted. And I always go back to, I think if you look at the $400 trillion market cap, about 10% of that is feeding intermediaries. And blockchain and crypto, etc., takes all that away, or a large part of it. And that's really the big area for disruption. What do you think, Dave?
Yeah, I mean, a few things. Actually, I think the real estate market is much bigger than 100 billion. I think
100 trillion.
It's like I've done, 100 trillion. Sorry. I think actually it could be 10x that, because a lot of times people don't include land and government, federal buildings, and a lot of property overseas is hard to calculate. But yeah, I think the 300 trillion, here's a lot. And here's the reason why. Is like the equity market, you're not just talking about companies. These are companies that are making all of the goods and services of the economy, the whole world. And you're valuing, their future production, their future profits, 10, 20 years down the road into today's current value. So that's a huge sum of money. For me, I think the potential of crypto, like I said before, is creating an alternative parallel economy to this kind of like economy built on the financial rails and legal rails of the government, credit card companies, banks, et cetera. So you're building a whole new legal and financial economy built on these super efficient rails of a decentralized financial or coded platform. And what you do is, right now we have a lot of financial instruments that have moved into, for example, trading, DEXs, you have, DeFi, lending, all this other stuff. And yet you're starting to get NFTs and gaming. What's going to happen, in my opinion, is you're going to start seeing layered, more use cases and more types of goods and services layered on into this new parallel economy on these new rails. And as that happens, you're going to start to see the percent of the crypto economy start to increase rapidly over time. At a certain point, I think it's between probably, the 15-year mark, I don't know, 20-year mark, where you're going to see it actually be comparable likely. And a lot of this depends on regulation, how much the government cracks down or not. But when that happens, yes, you'll have a huge amount of of the economy being divided up into this crypto economy and this legacy economy, and then you have perhaps hundreds of trillions of dollars on a crypto economy. But here's the thing: a lot of the value is not going to be just taken up on the financial instruments with the coins and assets, et cetera. It's going to be put into the companies who are making goods and services that people are consuming and using. That's where I think a lot of the value is going to be accrued. It reminds me a bit of the 1999 kind of 1998, 1999 phenomenon where the internet was catching on. I remember I grew up in Silicon Valley, and it was after college, and it all clicked in 1988, where I'm like, oh my gosh, the internet is going to take over the world. It's like game over. Yeah. And in 1999, later on, 2000, the stock market realized that. But the problem was that they were so optimistic that they thought all thousands of these companies pitching whatever would take a share of this crazy future of the internet. And what the fault or the mistake of that was that the internet did perform. The internet did live up, I think, to the hype. And it's still early innings, in my opinion. But the bulk of the value wasn't spread out amongst like the 10,000 companies that hyped, and hoped to achieve the value. It was really to the key people and companies who executed. Who executed 10 times, 100 times, 1,000 times better than any of their competitors. It's a fierce competitive market. And I think similar things will happen, with crypto is as it grows, you're going to have some fierce competition. If you think, like competition is fierce now, wait, until it flushes out, it's going to be pretty crazy.
Exactly. So you guys are so interesting because we've got Rob saying it's going to happen faster than maybe 10 years. You're saying it's going to take longer time. I'm somewhere in the middle. I think 2030, the world's going to be very different. I think the world's going to be entirely tokenized. And I do agree there's going to be a parallel blockchain-based economy, and there's going to be the traditional world. But one is going to shrink and the other one's going to grow. And they'll both, equate to each other. So let's switch gears for a second. I want to share one thing. And a lot of people are always concerned about the word, billionaire selling. We're going to talk, I've been very public about my kind of short with Tesla, biggest short of my life. Now everybody is kind of concerned that people like Jeff Bezos and people that promised they would never, ever sell their stocks, so the billionaires are selling. I know that Elon Musk had to sell for a whole bunch of different reasons. Jeff Bezos is now selling too, but it's rattled a lot of investors out there. So what do you guys think about billionaire selling? Are you concerned? Is just natural course of action? And that takes me to the next question. The market obviously is very frothy, very toppy. I'm hedging myself heavily as much as I can, but I'm still very long crypto. So do you guys see a bifurcation between the crypto market and the equity market? On top of the billionaire question of, are you concerned with billionaires selling when they said they would sell?
That's a good one for Dave. I'll let him take that one on Tesla.
Sure. So clarification, Bezos actually, I don't think ever said he wouldn't sell. He usually actually sells 1 to 2 billion of his Amazon stock per year, usually. Elon said he would put his shares would be the first in and would be the last out. I think he's fulfilled that promise because, to be honest, like early investors and
it's delayed again. Rob, what do you?
Someone said Dave's got Starlink. That's why.
You might have it actually. So, what do you think? Are you concerned about billionaires selling?
Billionaires do what billionaires do, right? And then Elon's a different guy. He's the same guy that not too long ago sent out a tweet and said, "I think that the Tesla stock is overvalued," and it tanked the Tesla stock. And it's like, we know he knows these things, but he still does these things. So when he's saying, "Hey, I need to sell this," I mean, there's a lot of reasons why he had to sell. I don't know if this has to do with the unrealized tax gains. I'm not 100% sure, but I mean, everybody's got to pay their.
He had to exercise options in California because of his wealth. His effective tax rate is 53%. So basically, him exercising options creates a huge tax bill. and that's
No.
part of his problem. So he's kind of he has no cash, he has no salary, he sold all his houses, so that's kind of where he is right now. It's kind of interesting.
See,
But what's super
Yeah.
interesting with all that money that he now has, question is, will he buy Shiba Inu or Dogecoin or Bitcoin? that's kind of the $1 million question for us all now.
I don't, in the long run, no, I shouldn't say like that. In the short run, it does make a difference. For some reason, people who aren't on this live stream right now, outside people will look at this and go, "Oh, he bought Doge. I should buy Doge because he's one of the smartest men on the planet. So it must be something." As opposed to, this guy just really loves attention, and I don't think it's like the most technological great play he could possibly do between Dogecoin and Shiba Inu. I could be wrong. History will prove me right or wrong on this one. But in the short term, yes, it'll make a difference. In the long run, will it really make a difference if he comes in there and says, "I'm going to buy Dogecoin," and then Doge becomes the number one cryptocurrency, or even in the top 3? No, I don't think so. So whatever he buys, it'll play around with the market. I would say this: if you're a short-term trader and he comes out and says, "Hey, I bought Dogecoin. If you want to make a quick profit, a buck, get rich tomorrow," type of stuff, gambling, buy a bunch of Doge at that point. But for me, that's not my play. My goals are not your goals.
Good. Welcome back, Dave. Sorry about that.
Yeah.
There's somebody apparently, Rob said somebody joked, maybe you're on Starlink and that's why there's internet problems or something. But.
Yeah. Yes, actually, I think Elon will probably purchase, Bitcoin, Ethereum, and Doge. Like, those are his 3 top holdings, he says. Bitcoin followed by Ethereum, and then a little bit of Doge. Actually, I think that's what he said. Yeah. So, yeah, and I think I think Elon is an interesting play. So last night he just revealed that he's actually maximizing taxes, meaning he's paying them like more taxes than he needs to.
Yep.
And the reason is he should just sell the shares that he exercises, because that has a high cost basis, and so he's going to pay taxes anyways. But what he's doing is he's actually selling also these low cost basis shares, which he doesn't need to, but they're going to actually create this huge tax bill. So according to my calculations, he could be spending or paying a good $3 or $4 billion in additional taxes because of his desire to give the government more tax money. It's crazy. I don't think any billionaire has ever done this before. Yeah. And I think he's making a statement, that he's not afraid.
He's like a billionaire prankster. He likes to play and troll and stuff like that. Okay, this is awesome. Yeah. So we got a couple of questions for the audience, and a lot of them for you guys because everybody's very excited. So first of all, this is from Kryptonite in My Pants. It's always a pleasure with you guys. Nice flamingo shirt, Rob. Warm welcome, Dave. Your thoughts for 2022. What are you most concerned about, and what are you most bullish on? So,
gosh, it's all about, is the Fed going to keep printing money? That's good for us. Is the Fed going to raise rates? Well, that's also something else we could look at. But the next big question is, when does this bull run end? And is this a super cycle, and how far do we go? I think it's one of those things. And also, I know people say that the crypto market and traditional equities are separated, but I don't think they are. I think there's a correlation there, especially when it's one of the few places that's open 24/7, 365. So I think if the stock market starts to crash for whatever reason, I think it's going to be an overflow into here. So the next question is, how long do we have? I don't think it goes to the end of December. I think it extends to January, February. Some people say June. I don't believe that, but I could be wrong. I'm happy to be wrong.
Good. Dave, 2022, what does it look like for you? And do you have any?
Yeah, I mean, just an anecdotal story. So, I've been checking rental prices in a California neighborhood that we had some rental properties in, and it's ridiculous. Like, the rent has gone up like so much just in the past maybe 6 to 12 months. So, for example, a house that was renting for, let's say, $2,200, maybe like about 12 to 18 months ago. Now it's going for $2,800 just after a year. But like, I'm actually shocked by this because I didn't expect like inflation and the Fed printing money to hit consumer goods and consumer cost of living, especially with rent, this fast and this much. I thought it would hit obviously assets like real estate, stocks, even crypto helps, everything and that. But for the consumer to be feeling, the like rent increases and all of this stuff, it's shocking to me, and it emphasizes the point that I don't think we understand the full impact of what the Fed has done over the past 2 years. Like
I do.
The amount, the sheer amount of money that's been printed and injected into the economy, it's an experiment. And I don't think people understand this. That this like to this scale really hasn't been done, and it's a lot of question marks on exactly what the end impact is. Everyone's like ho-hum, like everything's fine because the stock market's fine and the economy is okay, etc. But what about the increasing wealth gap, inequality, the people on the bottom getting crushed, and what does this do to asset prices also? And that's where, like, before I was thinking, hey, if the Fed stops quantitative easing next year, mid next year, perhaps growth stocks, et cetera, could take a hit. But on the flip side, the Fed has already injected so much money that the money is chasing such a limited amount of assets in the system because there's so much, money. When this will end, it could be quite a while, but when it ends, it could be a pretty spectacular end too. This is like uncharted territories I think we're in right now, and it's very concerning in some ways.
Well, you guys know my position. They've painted themselves into a box. They can't raise interest rates because they can't afford the servicing the debt. They have to keep on money printing just to keep the economy going. There's no way they can stop. Or if they do, everything crashes. So that is kind of the big thing that we're watching. And again, everything is 15%. There was a news release this morning that they increased Medicare, Medicaid, 14.8% increase. Everything is going up 15%. Your real estate rent example, that's more than 15%. Food, ridiculous. So that's a big problem. So net, concerned about 2022? You think it'll be a good year? My thoughts is the money printing will continue, and that inflates everything. But even though the stock market may go up 15% in 2022, that's the hurdle rate. They're still, because of debasement of the currency, you're not actually making any money. So that's kind of my take. So we've got a bunch more questions. This is from the guy, and I have a quick slide on this too. Let me pull this up. I actually prepared this, and the question came in regarding this as well. So, how would you invest $10,000 today? The question that came in from the audience is, how would you invest $3,000 today? But would you invest in this market?
Yeah, I'll go
crypto?
First.
Yeah, go ahead, Dave. This ought to be interesting.
Any asset class.
Obviously, it depends on everyone's situation. So this won't be a blanket statement for anyone. Just for myself, if I had 10,000,
not financial advice, of course.
Yeah, not financial advice. But I'm fascinated by some of these. To be honest, like even though I'm like a very kind of, in a sense, I won't say conservative, but I'm a very focused, concentrated investor, high conviction, etc. Part of the opportunity I see is like the part of the nature of crypto is you have these exponential value increases possible because the supply and demand is constrained, and the economics work out where if you can get into something early, there's going to be a flood of people getting in later if it's a desired asset, right? And so take an example of a game like Guild of Guardians or something where there is a robust Discord community. There's a lot of people waiting for this game, and I love like things like that have like a following. You have people wanting to dive into the asset and let's say play the game, etc. And it's really early on still. The people haven't discovered the trading price, whatever of whatever coin asset. And so these type of things are fascinating. I think if you can get in early and be part of Discord communities where you're really one of the people who are in the know, not a follower. I think if you're a follower, you can get crushed because if the project doesn't work out, then you lose everything, right? But if you're in the know, whether or not the team is following through with their promises and how they're executing, and you can you can keep track of that. And so if you have 10 grand, and if you pick the right project and you're really in the know, researching and deeply involved, you can see massive gains. I mean, that's where I think part of the lucrative appeal of crypto is. And
I didn't
it's
see.
not just in the
I didn't
it's
see.
not just in the fall.
Sorry, I didn't.
Okay.
I didn't see you being a degen investing in metaverse games. That took me by surprise. But I hear you.
Yeah,
It's really, really, really interesting insight.
yeah.
Rob, what about you? I know you're a metaverse land person.
Yeah, the thing is, like if you gave me $10,000 right now today, and again, everybody's different, right? And Dave says, what's your, talks about your risk tolerance and where do you want to be. If you're younger, you can take more risk. If you're older, maybe not. Or maybe you do want to take more risk because at some point you're like, this is my last place, so I got to do this type of thing. But if I see $10,000, first of all, I'm not going to put it. I just don't have a lot of faith in the traditional stock market. I know, James, you and Dave love it, and you picked your winners, Tesla being one of them. I can see some of that. But if I peel back, it really comes down to, well, what are my goals? Do I want to save this because I need to pay the rent and pay the mortgage as time goes on? Or am I going to put this $10,000 in to where I could potentially make it into 20,000 or 100,000 or $1 million? Well, there's a lot of different places. There's not too many places that actually do that. And one of those places, and Dave even said at the very beginning, is to take a look at the crypto digital asset space, because it's 100x. There's some 100x plays out there, but it is risky. So if you put it into like a coin that's 228, I don't know what it is, and then put it all into there, what happens if it doesn't go out? Or here's another example. Let's say it does hit, but it takes 2 years to hit because it was just ahead of its time. So now you're sitting that $10,000 that you really needed, and when everything collapsed, like James, you've talked about, as far as like with the price just just inflating so much, and Dave, you talked about how the assets just go up. Well, how do you afford these things? Because the 10,000 is stuck in this project that you're like, maybe I should have done it. So to me personally, if I'm going to look at things, first I'm going to take a look at the things that I know. And the things that I know that I'm really comfortable with is some of the top 50 crypto and digital assets that I think will do very well over time. I think Bitcoin will do well. I know if you're watching this, you're probably thinking, Rob, you're a moron because you should put it into XYZ because that's going to go up. Maybe, but it's a safer play. It's a lot of different hedge funds and institutions and big players talking about it. Can I do a 30x on Bitcoin? No, but it's a great store of value and it'll probably go up. And then maybe I take a little bit more and I put it into, I know this is not going to be popular again, but Dave even said it. He talks about the rent price of real estate has gone up tremendously, right? So if you're trying to buy a house, this is the worst time of all time because it's just so high. But if you're trying to get into investment properties for like short-term rentals and things like that, like what we do, it really is never a bad time. I mean, it would be great if the prices crash, but I mean, who knows? But once that actually happens, once they come in, you just charge what is comparable and go from there. So to me, Bitcoin, Ethereum are pretty safe. I know people don't like Ethereum. They say it's too slow, whatever else. I think in the next year, you're still safe there. Bitcoin, you're still safe. You're still safe with Solana as long as Sam Bankman-Fried is all about it. And those are some of the plays that I would do, and some other ones, which I don't want to get into. But yeah.
Great. So we're going to pick up the pace a little bit here. We've got a couple of questions, and all the questions, they all seem to coalesce around one theme. So one is from Miko Man, and it's kind of related to the metaverse. Like, what are all three of us doing as our plays in the metaverse over the coming months? I'll take that real quick. I have Engine Coin. I have a little bit of Rally, a little bit of Chili's. I'm looking into one blockchain type game, which is built on the Solana network. That's the extent of it. That's all I have time to look at. And I've also dabbled with a few other little ideas lately, just as pure speculation. But I'm getting to the point where I'm actually almost investing in too much stuff, which is against my philosophy. So I got to be careful as well. What about you two? And what percentage as well, related question from Vigor, is what percentage would you allocate of your portfolio to the metaverse?
Dave, what do you got?
Yeah. So... Yeah, I'm like, I'm still kind of building my crypto position. I think now that Tesla has reached over $1 trillion market cap, I feel like, okay, I still think it has a 10x potential in 10 years or 15, but yeah, I do think you can get a possible 100x in some crypto projects a lot faster, you know? And so I'm actually kind of like it's weird. I think I have these two things. I'm extremely kind of conservative and safe in some ways, but I'm extremely kind of like, go for it. And I kind of like am very tempted with the 100x's, you know, in a short period of time. And so, for example, I mean, my biggest holding right now, crypto is, I mean, it's still a very small percent of my overall portfolio, but is Axie Infinity. And part of the reason is I got in kind of early when the coin was at like AXS was at like $20, you know? And so last night I said, okay, I better stake my Axie. And so, yeah, it's pretty cool. You get like a APR of 117% staking Axie.
Yeah.
And it's crazy. It's going to be super volatile, super risky. I think once Axie numbers, if it starts to downtrend at all, like if you see 1 week of where it decreases its user count, then I'm going to probably be pulling 50 to 80% of Axie actually and sticking it into something else. But the other thing that I'm doing is I'm starting to email and trying to form relationships with some projects that are earlier on that I think I want to be invested in as like a private investor, you know, because a lot of the opportunities I think are being taken up by funds, investing funds, you know, VC.
Yep.
They're getting into like Solana. They're getting into all these projects super early on with minimal risk. You know, they've got like this $2 billion crypto fund now. But yeah, I think that's what I'm starting to do. Just yesterday, I emailed a couple founders, you know, and I'm like, hey, do you have any spots, you know, for any investors early on? These are maybe pre-coin. They don't have a coin yet, you know. But yeah, that's kind of the stuff I'm looking for right now is like the 100x in possibilities that I think, you know, have decent likelihood of happening. Yeah. And the other thing is, I think the coin or the thing that I'm interested in more of a safer long-term thing is buying on corrections. So, you know, I still think we're in crypto is going to be volatile for, you know, the next decade, I think, you know, and I think we're going to see 40%, 50% drawdowns, perhaps even more, who knows? And I think, you know, if you have a long-term mind and you are really in the know of certain assets, like for example, I'll be probably picking up Ethereum more and more as, you know, there's corrections and drawdowns, you know, long term. And if there's something better than Ethereum and that what I think is the leader of this parallel economy, who's creating the rails of this new economy, then I'll be putting it into that asset, I think.
Interesting.
Yeah.
Your percentage allocation to the metaverse, what would it be?
Let me I'm gonna make this real quick. Let me share this. Let me know when you can see it.
Let me I can see it. How do I pop? I'm gonna. Did that come up? Yes. Okay.
Got it? Okay. So basically this is it. I got two types of portfolios. I got a holding and a pretty much a degen type of thing, but holding is the majority. I trade a little bit, I gamble a little bit, NFTs and metaverse plays, right? We went over, there was this video we shot today with Crypto Stash. And this is, if you don't watch the video, here's what he told me. If you're looking for like play to earn and different metaverse plays, he talked about Gods Unchained, Splinterlands, Blankos, Gala Games, War Riders, Gala Games again, this new one called Ultra, Illuvium. I think this is what you were alluding to, James, Star Atlas. And then of course, from other metaverse plays, I bought land on Sandbox and Decentraland. So that is pretty much it in a nutshell.
Yeah, that's it.
Yeah. Well, these are the games he talks about to look at. And of course, I just bought a little bit of virtual land. I own a majority is real land, but a little bit of virtual never hurt.
Oh, hold on. It's like, yeah. Awesome. Good. So let's jump ahead to the next question. This one is from Caligula. Each of you moved for tax reasons. What was the hardest part of relocating real fast? Or was it for tax reasons?
Did you guys move yet? Or not yet, but you guys are both in California, right? You and Dave?
Actually, I'm in Texas. I moved about a year ago, actually, from California. Yeah.
So Rob left Texas. You moved to Texas. So I'm
Well,
still.
it was a smart play, Dave. Why'd you move to Texas?
Two reasons. I guess one is I'm traveling like 6 months of the year or longer with my family, and so I don't really like. And I'm planning to go overseas a lot of the year, like long term, just like traveling the world. And being in California, I love it there. We have friends and family, but it just didn't make sense. We didn't need to have California as our base just because we're traveling. So Texas is just yeah, it's a great place, much lower taxes, and we can always go to California anytime we want. So we actually have we have a vacation house there. We just kept a house, and so we can just travel. So it's just all win-win for us, we think, in our situation.
Super.
Yeah, taxes are low there, especially corporate taxes. There's no state taxes. It's great. James, are you still in Cali?
Yeah, I'm bistatal, so between California and Nevada, on the borderline of both.
Yeah. Well, I'm in Puerto Rico for obvious reasons, right? There's a reason why a lot of the crypto people move down here. It's because there's no capital gains tax. That's why. Yeah. And there are stipulations, and this is not the life for everybody. And people always say, oh, it must be awesome to be on a tropical island and things like that. Look, I'll put out another video, but I'm just telling you right now, it's not for everybody. If you have friends, family, loved ones, and you're in a place you want to be, what's more important? So just think about that a little bit.
Excellent.
That's all I.
So we'll go real quick fire now because I want to make sure we get to everybody and don't go too much beyond a few minutes past the hour. This is from Twin2. Do you think SpaceX can do a 10x when it goes public? That's for you, Dave.
Yeah, definitely. Well, here's the problem. SpaceX, when it goes public, if it goes public, it'll catch a huge premium. Right now in the private market, SpaceX is valued at like 100 billion, but there's so much demand that all these funds are charging huge amounts of carry and management, and it's still getting bid up. I think if SpaceX went public, they get it at least at 200 billion.
Did we lose him again? Hopefully not. All right. This is from from MS. Plan B looks like a miss for November. Thoughts, Rob?
I thought it was 98K for November.
I think yeah, I can't remember exactly. I get December and November confused, but yeah, it looks like he
doesn't matter.
Miss.
November's not over, so I can't really tell you.
Okay. This next one from Minaz Ali. Any thoughts on the ENS token? It was airdropped to everyone who had registered the ETH domain. That was incredible. That's one I missed. And everybody I know made at least $7,500 per domain from the airdrop. What do you think of that? Did you get the ENS airdrop?
No, I can't even speak to it because I didn't even get into that. So
yeah. Okay, this that was just a pretty incredible. Now everybody's looking for airdrops like crazy. This is from ARBO. How often do you balance your crypto portfolio? That is an interesting one. How often do you balance your, like, what percentage of Bitcoin, etc.? How much Bitcoin will be hodled? So, like,
I got to tell you, for rebalancing, I think that's a better question for you, because me, I'm not a big move things around type of thing. I just try to invest into the projects that I think have real longevity. And I don't really care so much about this year. I'm talking about 2, 3, 5, 10 years down the road, kind of like a generational wealth type of thing. So for me, I don't really get into new stuff. The only new stuff I've gotten into is the metaverse, and that I can't guarantee, but it's a pretty good bet that it'll dump as soon as this we go into like some kind of bear market, because that's just how it is, because it's so new.
Excellent. This is a cool one. Actually, it's very interesting to hear, Dave, what you said about Axie and staking. This question is from G Suite. What platforms do you stake your crypto, and what percentage do you stake? I'll take mine personally. I stake, for example, Solana, 2 different places, 30 each.
Go ahead.
So, over to you, Rob.
James, where do you stake your Solana?
I stake it on Exodus Wallet and on Phantom Wallet. So
yeah, Phantom's pretty easy, right?
Yes, Phantom's the best. Yeah.
Okay. Because I have the Phantom Wallet, I love it. I bought a couple NFTs. It's super simple. I need to stake it. I just haven't done it yet. So for me, I always go to the protocol itself if I can. So like with Avalanche, I'll put in a wallet and stake it on the protocol. I don't really like to keep things on exchanges. Cardano, I mean, I have my own stake pool. Even though I have my stake pool, I also contribute to my own stake pool and do it that way. And then for the other stuff, if I need to stake Solana, I just haven't done it yet. Other things, it's Gemini, not Gemini. What's the other one? Kraken. Kraken does pretty good with Polkadot. I know I should. And then Voyager does pretty well, and I just let it sit there, and that's about it. Sometimes even I get lazy.
Awesome. Good information. I'm going to 3 questions left, I hope. There might be more. I've got somebody managing all the questions. It's from Remy the Whippet. Is it reasonable to see Solend get to $1,100 to match or surpass Aave's market cap eventually if all goes well? Also, talks of Aave coming to Solana. Is this a concern for Solend holders? No, I think I'll take this one. I don't know how deep you guys are into Solend, but I think it is a serious threat to Aave, but $1,100 is definitely not going to happen. That's one of those 100x gains. It would be nice, but I don't see that happening. Not for a long time, if at all. And also with these lending platforms, there's always regulatory risk. So they're very, very risky speculative assets. So be careful out there, everybody. Dave B, thoughts on Eradix, EXRD, since it's on fire. It's not one I follow. You guys know Eradix?
No idea.
Sometimes what people do, I notice, is they go to CoinMarketCap and they sort by 7 days or 24 hours what's exploding, and then everybody kind of jumps on. But if that happens, and the big lesson I think the audience is learning from today from Dave is get in early. Timing is everything. You don't want to chase after something is pumped. That's the big takeaway. Would you guys agree with that advice?
Yeah, have friends who are whales. That's what I'd say.
Exactly. So this is from C. I have my Bitcoin on Coinbase. Do you think they will allow to stake Bitcoin soon, or best to head to Celsius? I personally don't keep much on Coinbase, but there is a staking option on Coinbase, but I've never gone into it.
Yeah, it is. I don't know how much it. Yeah, I don't know how much it is. I have some Bitcoin on Celsius, no problems.
Yeah,
just don't put all your Bitcoin in one place.
Yeah, cool. I'm just checking now to see if there's another batch of questions, and then we'll probably have to go real fast because I don't want to keep. Nope, that's it. That's it on the questions. So, guys, I really, really appreciate this, and I love the perspectives you both have from investing, etc. Again, any big takeaways from our discussion today? And I'm so impressed as well that, Dave, you are such a degen now. Jumping into the metaverse. I didn't see that coming. I thought you'd have a small bag of Bitcoin and maybe a little Ethereum, but not the type of plays you have. That's really impressive.
Yeah, it's a natural progression.
It's actually fun talking with you guys. I think first off, I think it's interesting because I know, James, I've talked with you quite a bit, but also hearing Rob, your kind of conviction on kind of these main core key assets, that will do well long over time. I think that's a great kind of, I share that, I resonate with that kind of, that sense where there's value to thing and sticking with the long-term game. What's going to be big 5 or 10 years? What do you know with high confidence is going to be there long-term. But I also appreciate you guys' ability to play around too, and gamble on the side and to go for some big plays as well. So that's awesome too. Fun stuff.
Well, awesome. I want to thank you both as well for being here on a Sunday, and I also want to thank everybody in the audience as well. All the super stickers that were sent in. All of this will be donated to animals in next week's show. So we have a surprise of animals we are supporting. So big thank you again, Dave and Rob. Have a happy Sunday, and I appreciate you guys being here. And everybody in the audience as well. Don't forget to subscribe to Dave's channel, link below, and of course, Rob's if you haven't already.
Thank you, guys.
Hang on.
Cool. All right. Let's see it.